Okay, so this week we're going to talk about, the next step in analysis. So we've talked about being able to extract, your balance sheets and your income statements from your ERP system, put them into Excel format, and then run some type of either vertical analysis or horizontal analysis. So remember the vertical analysis, it breaks it down for you each line item as a percentage of sales. For example, if you're looking at the income statement, if you're doing a horizontal analysis, you're looking at comparing your base period, so probably your past period, to your current period to get a dollar amount change over the period, or a percentage that you can use as a means to identify areas of abnormal or unusual activity, whether it's positive or negative change. Regardless, this is a great way to be able to pinpoint where anything that you didn't expect to change in a significant way might have done so, and then allow you to perform some investigation. Okay, and the goal here is that we want to make sure that you start to think of, in your roles and in your jobs, whether you're, doing this analysis on a balance sheet or an income statement, or whether you're doing it on, on an accounts payable report or an accounts receivable report, or a cash account listing, or any report that somebody might ask you to generate, that you're starting to get into the habit of thinking, how do I elevate this report that I'm preparing? It's wonderful and fine and dandy if you prepare, a current statement, okay, showing, okay, I want, the October 2015 current accounts payable balances. Thank you. Why not take it to the next level and provide the balances for September and August? Or if it's a really high point in season, cyclical, you could maybe go back to the last year, if we're trying to see, if all variables have remained the same, our revenue line and our buying lines and our selling, if there's changes in your AP or your AR that don't really make sense because things haven't really changed in terms of the business year over year, looking at a year over year change could help you as well. So it could be a quarter, it could be a month, it could be a year that you're looking at. But as soon as you start to add those levels of data to your report, you start to increase the value of your report. Giving someone or management, your boss, your manager, you're a senior executive, just a snapshot of where you are today really only is a starting point. And I can guarantee you that, if you're ever asked to submit some type of balance or inquiry or listing, the logical next step that you're going to be asked for is, well, can you run for me now the data for last month or this period or that period and show me where we've gone? So why not get into the mindset of already starting off at that point, already providing that data, being, putting yourself on the forefront and showing that you understand that trends are very important. And that's where, we're really trying to get you is, to be able to take your data that's been inputted into your ERP system, to be able to extract it and throw it into a wonderful software system like Excel, and then to be able to start to massage these reports, to be able to show trends, to be able to show, that you're able to identify those variances, again, whether they're positive or negative, and what do we do with them? How do we investigate? What do we need to look for? And these are the skills that are going to catch the attention of the people that you work for. These are the skills that are going to help you to be better in your job, to do better, to reduce problems. Okay, if you're able to identify problems by looking at variances period over period, then you're able to identify some of the things that might be triggering these variances and work on initiatives to eliminate them from, hopefully, from the business, right? So really, you have to look at these Excel skills as, a skill set. They're tools that will help you in your personal career development, but also, within the work that you do every day. often in times that we don't really enjoy some of the tasks that we have to do because there's so many things that are involved that we might find challenging or annoying or a pain. And if we don't spend the time to investigate why they're happening, they're never going to go away. So that's hopefully the value that we wanted to bring to you guys in these modules about learning how to take your Excel data and really work it into usable, better financial reporting. So this week we wanted to kind of do a little bit of an introduction into the financial performance ratios. Obviously, going into a discussion about the ratios, that's a course in itself, and it's not within the scope of this computerized accounting course. But if I wanted to just give you somewhat of a brief introduction as to what we're talking about. Okay, so this is just a summary that I found of what typical key financial ratios are in a company. Okay, so we have profitability ratios, we have gross profit, our formulas on how to calculate, and a brief description of what the value is for companies. Okay, so if we look at gross profit margin as an example, it's sales minus your cost of goods sold divided by sales, and it's an indication of the total margin available to cover operating expenses and yield a profit. So what does that mean? How much money we have left over after we've spent on our cost of goods sold to pay our expenses, our salaries, our wages, insurance, depreciation, all of these things. Okay, how much money is left over to cover our operating expenses? So it's obviously a really important and one of the most commonly used performance ratios in all businesses. So I have a listing of all. We have profitability, liquidity, basically looking at our current cash. Are we able to cover our current liabilities? Are we able to pay our vendors on time? Are we able to pay our associates on time? Are we able to pay the bank on time? Okay, these are probably more critical in my personal opinion than looking at maybe the gross profit, because if you don't have the ability to manage your cash, then you're going to just have a hard time sustaining this company. Okay, leverage ratios, is your company heavily leveraged by your assets, or are you more leveraged with debt? And the higher your debt ratio, the worse that is for your company, because it means you're operating on borrowed funds, and that is a risky position for any company to be in. So I'm going to post this for you guys so you have access. This is just a great summary for you guys to have a bit of an introduction to what the ratios are. But again, to go into in-depth conversation about what they are and how we're using them is beyond the scope of the course. But what we wanted to make sure is that you at least have a bit of an introduction and you have the formula. Okay, so this will give you the formulas on how to calculate the ratios. So now if I wanted to actually, try to apply these ratios, if someone says to you, can you run me the income statement, and can you just tell me what the gross profit has been for the past, 2 or 3 periods, so that we can look at the trend. Okay, so hopefully now after you've done these modules, if someone does ask you to do something like that, it makes more sense to you. What are they talking about? So what we're talking about is going to your ERP system. All right, looking for your income statement. Give it a second while it downloads. Gotta love technology. Sometimes it's quick, and sometimes when you need it to be fast, it's not particularly fast. But just give it one more sec, guys. So there it is. We have a comparative income statement. So what do we need to do next? Well, we want to be able to, massage this into a nice format. So we want to export it. So we look for our exporting icon, and there we see it's exported and ready to be opened. So I open it up. This is a different one. Give it one sec while it opens. Say yes. So here we have, the comparative income statement for October 2015 to the prior period. We have your dollar variance, and your percentage variance. Okay, so it's done the horizontal analysis for us. Another great advantage of the NetSuite system. So basically, what you want to avoid doing is just sending something like this out to your boss and saying, here, take a look at this, run your own calculations. You don't want to send your manager, senior manager, or senior executive into a meeting with just a summary, and then they have to pull out their calculators and start to perform all these calculations on the fly, making notes on their papers, and not be prepared to discuss. Right? There's less and less time these days when you go into a meeting, to sit there and make notes. People are hounding you in that moment to give them, tell me what the problem is and tell me what the solution is. Right? So you have to be the most prepared that you can be, and the most prepared you can send, your manager or senior manager into a meeting, the better that will reflect upon you. Okay? So this is just me showing you, our export of this comparative income statement into Excel. And this is nowhere near ready to be shown to anyone. So what does a ready report look like with performance ratios? So I'm going to open up the example that I have here. It says Microsoft, but it's not really Microsoft. So let's just change the name. So in this particular example, okay, this is the income statement information right over here. Revenues, cost of goods sold, gross profit, other operating income, your total operating profit, income and expenses, profit before taxes, net profit or loss from continuing operations. Okay, your standard, income statement format, and your dollars, and then we have periods. Okay, so here we have 5 years. Don't necessarily need 5 years, but that's what we have. So now, someone says to you, run me some of the, performance ratios for these 5 periods and send it to me in a report. So what do we expect it to look like? Okay, so it can look something like this. I know it might sound trivial, but things like the boxes and the lines and the color changing, these are all excellent ways to make your report information stand out. Okay, because if we look at, this example, nothing is really standing out here. Everything is kind of, it looks like too much data. And the last thing that anybody wants to do is to be sifting through, unnecessary lines that they don't really need to look at in that moment. Okay, so being able to, collapse all these lines into one single line of data, but always having the individual lines available to review, that's what you want. Okay, because we want clear, concise data that is useful and what we need, but we also want to make sure that we always have the backup available so that we can speak to whatever makes up these numbers. Okay, so here's your basic income statement, and now we want some ratios. Okay, so if we scroll, I'm gonna hide this for now. We're gonna hide this. And in this particular example, we said calculate for us the return on equity, calculate return on equity, the first one is return on equity and comprehensive income. The second they wanted was return on equity, and then we have a profit margin ratio, asset turnover, and financial leverage. So there's a bunch that are in this particular example. So again, we're not looking at the actual numbers right now and analyzing whether they're good or not. That's for a different course in itself. But what we just wanted to show you is, in this particular example, they've actually shown, okay, this is the ratio that we want to point out. So the return on equity and comprehensive income, and they've actually put in, how it was come to. So their formula, CI, which is comprehensive income, divided by average owner's equity. And then we've got our numbers, our percentages, okay, once the formula has been applied. Then they said next thing we want to know is return on equity, so net profit divided by your average owner's equity, and we got our numbers. They wanted to know profit margin, so profit before taxes divided by revenue, run it, and the same for asset turnover, and the same for financial leverage. Okay, so what we now are able to see is we have our you know what, we have our percentages for these 4 periods. Okay, they didn't run it on 2007. But now we're able to say, okay, we see a trend. Okay, so the return on equity has been going up since 2009. You know, it was highest in 2008, you know, but maybe there's underlying industry issues that might have changed between 2008 2009, which make the you know, big drop between these 2 years make sense. But regardless, if we look at just the most last current period, which would have been the 2010, you know, we see that we've gone up as well for, you know, the return on equity line. We've stayed static on profit margin ratio, and we haven't completed it yet for these 3 items yet for the current period. But just, you know, just we wanted to show you to get a sense of, this is something, you know, a great example of how you could take your income statement and elevate it. Okay, we don't want you to do a separate workbook or Excel spreadsheet or in a Word document or in a separate email that lists these out. We want it to be shown kind of exactly like this. You know, have your base data on top, and then run your ratios, put it into this, you know, same type of format here just below, so that someone can quickly scroll up and take a look at the numbers. Okay, so we have it in as a percentage. We scroll up, we see what that means in dollars, and we can talk to the dollars, we can talk to the percentage, we can talk to the changes year over year, period over period. And you know, it's kind of like one-stop shopping, and that's probably, you know, the best way that I could explain it is that your report needs to be one spot, one stop shopping for your users. Okay, whether it's internal, external, whoever the case may be, give them what they need, face value, you know, clear and concise. But again, always make sure that you have, you know, the backup. Okay, what makes up this 69 million? If it's different segments like we talked about last week, make sure, you know, in your own in your other documents, you have a breakdown of, you know, how this revenue was achieved by which operating segment, so that if anyone asks you for that information, that you do have it handy. You know, if you want to include it as rows and then just you know, collapse them as a subtotal, then you do that as well. So this was basically where we wanted to kind of get you guys going this week, was just to show you, you know, step 1, entering your data into the ERP. Step 2, closing your period in the ERP. Step 3, running your financial statements. Step 4, extracting it and exporting it into Excel. And then step 5 is reworking it so that it looks proper, so that it looks concise, so that it's summarized. And then, you know, the last step 6, you know, adding the layer of these performance ratios to prepare a great report for management. So that's really what our goal and our intent for you guys was. It was just to show you kind of, you know, from beginning to end, where you would be expected to get. Okay, so from the taking it from the ERP to the submission of a great looking Excel report like this. This is what the end result is. And you know, the better you get at being able to prepare these kind of reports, you'll probably see that, you know, that will help you in your career progression. Because, you know, financial reporting is, I mean, it's everything in a company, and it's the basis for all decisions, and it's the basis for all, you know, the movements and discussions that happen. You know, and if you're not able to prepare these types of reports, you know, your value in a company really kind of might remain stagnant. So hopefully you see the value and the benefit to learning these skills, and you know, you're able to complete some examples on your own, and you know, hopefully use this in your real world, in your real life, your real work experience. All right, guys, thank you.